Thank you again, and good afternoon again. And things have just been going swimmingly so far, so hopefully we'll have no technological breakdowns now, and no big, huge fights or anything, except for good fights. And I again want to thank everyone for the kind of generosity of listening that people are offering to these talks, since they are works in progress. And it's been great to be able to give people feedback and to talk to folks about how their project is unfolding and how we can all learn from each other in this space. It's really a delight to have Carol Benson as our next moderator and discussant. Carol, she already knows this, but when I grow up, I want to be Carol. Like, Carol is the founding partner of Glenbrook, which is a major payment strategy consultancy firm based up in the Bay Area. I participated with some of my colleagues in one of Glenbrook's boot camps, which basically is a 2 or 3 day intense session on everything having to do with the payments industry, and it was just stunning. And I will say, just as a bit of context for those who don't know, when people like me started getting interested in mobile money and started looking at things like M-Peso or Gcash in the Philippines, we really were coming at this from the point of view of the mobile being a new channel for banking. I mean, that was kind of a lot of our initial thinking. And it took a while. I mean, it took a few years for us to start realizing that there was something different from banking, and that was called payments. And payments was about sort of the transit and transfer of value that involves a whole set of infrastructures and regulations and law that really, touch on banking but aren't the core of banking. And that was a real kind of consciousness awareness raising kind of thing for us, as well as, impressed upon me and others at the foundation and academia of the importance of really trying to get our heads around what payments are. This is the woman who will tell us what payments are. And like I said, a real inspiration. So, Carol.
Thank you, Bill. It's delightful to be here. And Bill, I think we're going to end up having to trade, because when I get a chance to come and be at a day like this, I realize that in my next life I'm going into academics. So we'll have to do a swap. I wanted to say one other introductory comment, which is I spend most of my professional life dealing with institutions, companies, networks, banks, companies that are trying to make money in the payments industry. And it's a little shocking how few of them, I think, really understand the human dynamics that are involved in payments and the management of money. And when I listen to the sessions today, it seems like that's really what you're talking about here, and what all of us on the business side of payments need to spend more time thinking about. I certainly think that our panel today is mostly going to be talking about those issues. So we're going to start with Mobile Money Utility and Financial Inclusion in Nigeria and Ghana by Lite Nartey and Yinka David West.
Good afternoon. Thank you all for being here. In the session before, the first speaker made a comment about, the after lunch stupor. But now I'm going to make the comment about, there's nothing like being in this session that is between a set of academics and their alcohol. So we're going to go through this quite quickly. So Bill started this morning, and he said, that we're going to have a common set of questions, the role of banking upon the poor. He's brought in, the question of banking and the idea of payments here. And Carol has just spoken to you about the human factors. And one thing that Bill did say this morning was that it's interdisciplinary, and that's why we all hear from different areas. He mentioned like 9 different groupings and did not include the business school. So we are the business side. And we're here the idea here is, of course, that, mobile money, banking, payments, it's all about business. And it's important for businesses to really come on board and understand that there are win-wins for them and also win-wins for those who we seek to transform the lives of. Anyway, so the big question, and from the outset, the idea of mobile money was, that technological transformation or technological innovations can transform lives of those at the bottom of the pyramid. But here, the key question that we're exploring is utility. And the thing here is that for this innovation or for some social technology or social innovation to actually change the lives of the poor must understand it and adopt it and actually use it for it to be able to transform their lives. And unlike the issue with, Ford when he rolled out his Model T, he's famously said, he's apparently famously said to have said, if we build it, they will come. But we're finding that there's quite a low level of adoption, and we wanted to understand the utility, that if we're bringing something out for the poor, how do the poor see it? How do the poor use it? How can we improve it for them? And so, by the way, I'm Mudita, and this is Yinka, and our third author is happily sitting in Nigeria watching this from far away. So I've given a broad outline, but I'll just speak about the objectives, the methodology, and we'll hand over to Yinka to explore the preliminary findings. So the objectives, as I've outlined already, is, we're looking at applications. How are the unbanked poor actually using mobile money? What are the innovations? Are there any ways that they're using it that we haven't really foreseen? And Bill mentioned it this morning that, maybe it's these unidentified uses that may be really exciting. And of course, the limitations, that there is an understood way of using it, and maybe they would like it to be used in another way. And so that was the idea behind this project, this proposal, actually. Anyway, so the methodology that we're using is mixed methods. And of course, mixed methods, we are using desk research. There's a large body of literature out there. But also, in the context of where we're studying, we also did several interviews. I'll tell you a bit more about those. Focus groups in the two countries, and a large empirical survey. This is where the economists, we expect you to appreciate this, that it's a large empirical study because we want to have empirical findings with empirical statistical significance that really speaks to this phenomenon. So we've actually already completed our surveys in two countries, 2250 each for a grand total of 4,500 surveys. They've been inputted, but we're yet to really delve into it and begin the analysis. Our population is poor urban dwellers. We capped it off at $200 a month in local currency equivalent. And the locations, Accra and Lagos. So these are just some of the pictures, and of course, for those who are unfamiliar, this is Nigeria, and this is Ghana, and we actually chose the two countries, not that we're both from, I'm from Ghana, Yinka's from Nigeria, but also due to the fact that West Africa has 3 Anglophone countries, Ghana, Nigeria, and Liberia, and Liberia coming out of a different political environment. We thought we'd start off with Ghana and Nigeria. Anyway, so these are some of the, just a quick overview of some of the places in Lagos. And Accra, our lead, one of our key research assistants who was helping us, actually, at the end of one day, had driven 80 kilometers around Accra, picking up all of the surveys from our survey teams on the ground. So our focus groups, these are just some of the pictures. As I said, 100 urban dwellers, and these included traders, dressmakers, hairdressers, barbers. So all of those where they're unlikely to have gone to secondary school, if you will. And these are, of course, the people that we expect mobile money will be able to transform the lives of these people. Also, the surveys. So what is very important here is coming from these two countries, we used our local knowledge in the actual setup of the survey. And Bill mentioned today that, of course, it's important to do research that is considered to have been vetted, if you will, or of high quality. And so one of the things that we used, instead of just going out into the field and handing out surveys, again, to those who are poorer, those who may be less literate, we actually used university students. So we trained a set of students, 33 in total, in both of the countries. There were 13 in Ghana and 20 in Nigeria. And these students, after training them, were sent out into the marketplaces to actually interview and speak with all of these individual people and write down the surveys themselves. And this really has helped with the data being cleaner, the data being more usable with fewer errors. And the data that we gathered, so demographic data, age, occupation, how much they earn when they were willing to give us that direct figure. Also, the use of mobile phones. We were having a conversation at lunch today about the fact that when you go to Ghana and Nigeria, everybody has at least 3 phones because the telcos, how can I say this? Their services differ in quality, and so therefore if one is not working, it's nice to have a different phone so that somebody can still reach you. So we tracked that. Also, mobile money. If mobile money is an innovation for us, then also the question of how are they using the local savings, which in Ghana we call susu savings, and so wanted to explore that. Also, after speaking with some of the telcos, one of the questions was an issue of trust, that really it may be that people don't seem to trust the telcos, and so we asked them in the survey as well questions of trust of their local susu providers, the banks and the telcos, and whether they have a bank account. Of course, the whole idea is that mobile money is for those who don't have bank accounts, but what we seem to have found is that people, you have a bank account, but they don't use it, or they use it once a month, and so therefore those are non-bank account users. And of course, how they use the mobile money, questions of how they use mobile money were asked, open questions on the survey. So right now we have a large empirical, we want to do a large empirical study. As I said, we've gathered all of the data, and we're in the midst of cleaning right now. So I'm going to hand it over to Yinka to tell us about the findings.
Thank you, Lite. Now, Lite asked the question, how are the unbanked poor using mobile money? And I guess I'm supposed to answer that. And I think the answer is sort of obvious in that they're not. But what we'll share with you generally is what is really happening in the mobile money industry, both in Nigeria and in Ghana. So I'll start off with the applications. The banks are very proud in what they're doing with mobile money. However, you find out that these things they're doing are not different to any other payment system or payment service. So from the everyday mobile money user, the poor unbanked users, what they're looking for is everyday services. Utility services like paying for general transportation, buying things in the open markets, but that's not really the target focus of the bank. So you realize that there's a disparity in what mobile money is doing currently and what the users want it to do for them. both in Nigeria and Ghana, we have different regulatory models, and I think in other countries that use mobile money, they mainly have a telco-led regulatory model. In Nigeria, we have 3 regulatory models that are being proposed. The first one is the bank focus, where the banks are the licensed users of mobile money. The second is the bank-led consortium of mobile money operators, and then there's an independent model as well. In Ghana, that independent model is being led by telcos. In Nigeria, telcos have been excluded from the operation of mobile money services. And these have interesting findings when we look at the different actors. So when we look at the actors, we find out that Ghana and Nigeria have similar actors from the unbanked poor. There is low awareness and also low utility and adoption. They have their regular savings, which they're still dependent on and have more trust and faith in. And then there's also poor marketing communication in terms of the mobile money products and services themselves. However, telecom services are very popular and very well widely used, as Lite mentioned earlier, 3 cell phones per human being. And these are also trust issues. When you look at the people who do use mobile money, you find out that they're actually not they're the regular banked users. And so you ask yourself, what's going on in terms of how we're going to draw in more customers for mobile money? There is no bank and independent MNO in the Ghana model, and you just have the telcos as the bigger operators sitting on top of their data and voice services. In Nigeria, again, there's the same low awareness from the utility side. We have regular savers who are doing the same similar things. We call it Esusu or Ajo, which is just contributions where they take money and give to one person. And every month, somebody cashes out on that money. So it gives them an opportunity to have access to large sums of money. Again, one thing that was funny in Nigeria was that the poor didn't see mobile money as their product. And that led back to the issue where, it's the same users that are using the mobile money, an alternative payment system, an alternative channel, that's still in dispute as to whichever way you want to look at mobile money. But from the bank's perspective, the banks are seemingly running mobile money services as a cost reduction strategy. In other words, this is cheaper for you to do. Don't come into the banks, just do your business electronically, and that's what they want to use. However, they're also trying to sort of grow and work on performance. Return on investment is very key because access to funds is limited in the banking industry as well, so they have to sort of generate the returns and the numbers from mobile money. There's also the issue about how do we grow mobile money? Are we trying to solve the financial inclusion problem, or are we just trying to get people to use the platform? So right now, the banks are simply trying to just work on getting people to use the platform. Then they'll develop strategies if they want to for financial inclusion. Then they'll develop strategies for moving into from the urban to the rural areas. In the independent mobile money operators, they're a bit limited in the sense where their barriers to entry are very high. They've come into the market unknown, unnamed, and they have these high barriers to entry in terms of developing the technological infrastructure, developing the agency networks, and so we're still waiting to see what's really going to happen to them, and then competing with the banks who have branches in different locations to serve as agents as well. The limitations are fairly significant. When we look at it, as we mentioned earlier, there's the issue of very low awareness from the product operational perspective, the agency networks, and also there's the issue about the differentiation. What's the difference between mobile money and mobile banking? And that's leading to a lot of confusion in the market. In other words, who's the target audience for each of these products? Are they one and the same, or are they different? There's the issue of reach. Even in the urban locations, we still have poor reach of mobile money. Talk less of going to the rural areas where these services are required, especially for remittance purposes to friends and family in the rural areas. Then there's also the issue of acceptance from the low merchant population, because we're still a very cash-based society and merchants like to see the cash, especially merchants who live on daily earnings. So they want to be able to use the money they've traded today and for their livelihoods today and tomorrow. There's also the issue of the low agency networks. There's very few. I think Elizabeth mentioned to me at lunch today that, Nigeria, some banks would say they have thousands of agents, but yet they still have very few agents, independent agents. Then there's the issue of the usefulness of mobile money. The question is, what am I going to use it for? Can I take it to the open market and buy tomatoes and pepper? Or can I pay for a taxi with it? Can I pay for a motorbike ride with it? Those are everyday things that people use money for. And so if it's not going to be used for that, then there's a question of the value proposition of mobile money. Then again, that also leads to the differentiation. How is it different from what I'm doing today? And so you find out that the people are wanting more and the banks are not really providing that more. Then there's the issue of, Lite mentioned earlier, reliability of the infrastructure. And this leads to a whole quality of service issue where we have significant call drops, call failures, network unavailability, etc., etc. And then there's trust as well. Des mentioned the issue of sorcery. Sorcery is also one of the issues of mobile money where some people say it's antichrist. Well, maybe that's true, maybe that's not true. There's also issues in terms of the risk of loss and also poor consumer protection rights. The earlier electronic banking products have not really given people much confidence in the fact that this is a better channel and their operations will be better in this sense. So those are utility limitations generally. Other limitations that we found are the regulatory models. The regulatory models are still evolving and they're still very unknown and very untested. So it's still more of a trial and error product and service. And yet, mobile money is not really addressing financial inclusion. It's just another transaction platform. Then there's the issue, there's the telecom rivalry. And I call it rivalry because they've been excluded from participating in this business. Meanwhile, in other countries, they are the main leaders in the participation. However, we still need the telecom networks to move the transactions. So do they give these transactions priority or do they drop the transactions? Well, there's some foul play going on and we'll wait and see what happens. Then on the technology side, there's issues of interface. We have very low literacy levels in Nigeria and in Ghana. So the interfaces of SMS versus mobile apps also brings in the issue of availability of smartphones. So there's this, and then there's the short codes as well. So there's this disparity in what technology will really be suitable to the poor. On the bank side, as I mentioned earlier, there's this issue about long-term returns. In other words, is this really going to make us good money, or is it just an exercise in futility? And then finally, there's the case of interoperability. Many-to-many relationships between providers, between agents, or is it going to be a one-to-one relationship? And these are some of the challenges that, whether we like it or not, they're going to impact the utility of the service, irrespective of what the providers offer. And those are our preliminary findings right now. So we just want to say thank you to IMTFI, to our USC cyber team, and also to our Lagos and Accra research teams. Thank you very much for listening.
Okay, great. Thank you very much. So next we're going to go to the Philippines. Erwin Alampay? Did I say Pai? I said it right. Okay.
Good afternoon, everybody. Bill said our presentations are a work in progress of research that we're currently doing. So if I'm going to summarize where we are right now, I'd like to say it in 2 words. It's disappointed, but hopeful. And I'll tell you a little bit of why I'm a bit disappointed. I suppose a lot of you have sort of like developed a research proposal, and after it's been granted, right in the middle of in the field, when you start it, you realize you've conceptualized everything incorrectly. So that's exactly what happened to us. I started off from an article in CGAP where they said, in the Philippines, GCash is implementing the CCT program. It serves 300,000 people and delivers 1 billion pesos annually. And that's where I started. And I had this idea that people were getting mobile money or GCash into their mobiles, and I wanted to see what's the impact of that. And I guess the other lesson here is that I'm also hopeful because this is exactly the reason why you do independent evaluations of projects. And that's to validate whether such statements are true. So I'll give a brief history of what the project is about. Conditional cash transfers is the in thing in development today. It's being done in Brazil. It's being done, I think, in Peru, in Latin America, and the Philippines also has been doing it. So it's a global trend in the world, and in the Philippines, there's a dramatic trend increase in conditional cash transfers. So conditional cash transfers are targeted to the very poor, and by design, it's supposed to be given to women, okay? Because supposedly development is better if it's the women who handle that aspect in the family. So if you'll see from 2010, it started off with 1 million beneficiaries. By 2014, they foresee around 4 million beneficiaries. And the value has increased by 3,300% in 5 years. And by the way, I'm from public administration. It was, Bill, I think, forgot that as well. But that's the interesting thing. You have practically 33 or 34 billion pesos in theory that has to be transferred or delivered to the very poor, which is exactly what IMTFI is very interested in. And of course, with such growth in distribution, the question is, how are you going to deliver that amount of money? And of course, mobile money would seem to be like a very viable avenue. So this is a picture of how conditional cash transfers are literally done. Okay, you'll see the thousands of beneficiaries lining up to get money. And imagine how to do that every month or every 2 months to all those millions of people. Okay, I don't know if you see it below, but in 2008, it was all manually delivered. And then over the years, there's a portion that is delivered through GCash or GRemit, which is the remittance service of GXI or Globe. Right now, it only serves 12% of beneficiaries, but they peaked to 29% in 2011. Okay, so the question is, would it be better? Would it be more efficient? Would it be more secure to use this available network? Would government be able to deliver conditional cash transfers using mobile money? Okay, so that was my initial research interest. So before it was done quarterly, and then now they're doing it bi-monthly. Around 500 pesos is given per family, plus 300 pesos per child, which ranges from 1,600 to 2,800. Bi-monthly, each participant would get that. Okay, if done monthly, it would range from 800 to 1,400. Ideally, they'd want to do it monthly, but of course, operational costs of doing it manually is very high. Imagine delivering all those money literally by helicopter, by train, or by boat, or what have you. These are the different models by which or conduits by which they deliver the money. Okay, they say at least 60% you could actually go through banks. Okay, and then the problematic area is the 40%. You could also go through the postal service, and then over the years, GCash or GRemit, the price of the GRemit charges has gone down. Okay, but a large part of that is because they really don't know how much their operations are. Okay, the only reason it has gone down because is over the years they started opening up the opportunity to other bidders, such that the bid has gone down to 42 pesos per beneficiary. So if you have, in theory, if you have, say, 1 million beneficiaries, that's an opportunity for a provider to get 42 million or bi-monthly or per month if you have you. Okay, so here the threshold is 42 pesos right now. So the reason they hooked onto GRemit is, of course, very pragmatic. Government cannot do this. I mean, this is operationally difficult to do. So if somebody is there already, then we'll use them. The perceived cost savings of having a partner is also there. And then it's logistically easier to partner up with other groups. So what we did was we first interviewed the implementer. DSWD is the Department of Social Welfare and Development. So they're the ones who find the beneficiaries, who target the beneficiaries, and they're the ones who identify them. And then we did field observations. And we also, by design, we wanted to do surveys on house-to-house surveys because the assumption was they had the mobile phones and we had to go to them. Well, the advantage of finding out that that is not actually happening, that the mobile money is not going to them, actually made it easier for us to survey, because what we literally did was just go when the distribution happened, and then we did random selection of individuals while the lines were there. So we did an initial survey of 192 respondents, and I'll talk to you about what the results were. We conducted the survey in Region 4B, and you'll see that the proportion of GCash users are relatively high. Okay, and then we chose Mindoro Occidental, where the conditional cash transfers are actually released in more than 50% at least of the beneficiaries. Okay, and then in San Jose, which is the particular municipality we went to, it's also around 50%. So it's easy to find beneficiaries who are getting the transfers through the partner GRemit. Okay, so this is the island of San Jose. It's just to illustrate how difficult the logistics are of delivering cash transfers. So one of the first things we found out, even before we did the survey, was that M-Money was not really used. M-Money was used in the sense that it was going through GCash, but the transaction was usually between the merchant and Globe. It wasn't directly to the beneficiary. So for me, technically, when I was thinking about it, it was actually an unnecessary kind of transaction. In the first year that they did it, the merchant was still texting to validate the identity of the person. Okay. The other thing was that the GRemit merchant was actually limited by the number of people or desks they had. So they'll go from village to village. It wasn't even simultaneously done. So distribution was manual. So you'll still see the long line. So obviously you won't see the benefits of doing mobile money in this regard. Security is a concern for the merchant because, as you'll see, there's no security at all. Okay, so from observation, mere observation, you could say it's not more efficient, it's not more secure. And then the other interesting thing we saw, and I thought I'd like to put this here, was that when conditional cash transfers are delivered, then obviously the whole community finds out. And when the whole community finds out, then the markets follow. So wherever they're distributing the money, then also instant markets come along. And I thought that's interesting because there's a paper by Acker who says that the difference between transferring or zapping money is that sometimes the privacy allows you to consume the money in a more deliberate manner. Okay, so I thought this would be something we'd like to investigate further in the future. So what we did instead was to try to picture whether it's still feasible to do the original idea in my mind, which is, can you still deliver mobile money to the very poor? Okay, so the first thing we asked was, we asked the mobile money merchants, which were actually present in the city of San Jose or the municipality of San Jose, and ask what the rates are. Okay, so these are the ranges from which the funds transfers would more or less emanate. Okay, so if your transfer is around 2,800 pesos, the cost using smart money, which is the original kind of M-Money in the Philippines, which was started in 2001, is only 15 pesos. For GCash, it would be around 60 pesos. Okay. This is a comparison with smart through ATMs. Okay, I'll just go through this quickly. In our computation, so currently the government pays 42 pesos to GRemit per transaction or per beneficiary. In our computation, if you do it on a monthly basis, you could actually pay at a lower price if it goes directly to the beneficiary. Okay? So even at current prices, the range would be around 32 pesos, 37.50 if it goes directly to a mobile cash system. So the next question is it something, the same question the earlier group asked, can beneficiaries actually do this? Do they have access to phones? Have they had experience using mobile money? So the interesting thing is, in our survey, the initial results show that beneficiaries farther away were more resistant to using mobile money than those who were nearer. Well, part of it is because those who are nearer are more familiar about where the merchants are. Second, most of the respondents were smart subscribers. This is important. In the Philippines, there are essentially a duopoly. You have Smart and you have Globe. And Smart actually controls 2/3 of the market, and Globe controls 1/3 of the market. Globe actually has more affluent customers, and Smart has the bottom of the pyramid. So even just from that cursory data, you would think that the more logical partner would be Smart, and that was validated in the survey. Okay? Many were more familiar with the Smart Padala centers than the GCash centers, and those who have had previous experience using Smart Money were more likely to report interest using this option. Okay? So I applied the stages of access by Van Dyke. So 71% were interested or willing to receive CCT through their mobiles. In terms of access to phones, 49% have a cell phone. 90% of those who have a cell phone are subscribed to Smart, okay, and not Globe. In terms of skills, 34% know how to receive money using a cell phone. Even some of them don't have a cell phone, and what they have is essentially a SIM card. And then in terms of usage, actually 33% have used Smart Money, which to me is actually quite a lot, surprisingly. Okay, and these are the bottom of the poor. So in terms of usage and experience, I think the Philippines is quite ahead compared to many countries. And part of that is because we have such a large diaspora population, and there's also large internal migration, and this fuels this remittance transactions. So to summarize, ownership of a cell phone was not statistically significant as to whether they were interested in M-Money. Pre-existing knowledge to use M-Money was statistically significant to willingness to use this as a conduit for conditional cash transfers. Those who know were more willing. Distance to known redemption or merchants of M-Money was also statistically significant to willingness. Those closer who were more willing. And then in actual implementation of the model, we realized benefits were not apparent. It was not more efficient. It was not more secure, meaning using it through the merchants alone. Actual overhead cost was not yet known, and that was actually the reason why GRemit is still... I'll go back to my disappointment. Actually, before disappointment, I was actually panicked. Because when we were starting, we said, well, we're not actually using GCash anymore. That was around June. But they said, but wait a little because we might come back to it. Because apparently, before June, Globe lost the bid. So it was a pawn shop which won, a pawn shop network. They bid at 42. The next round of bidding, the pawn shop didn't bid anymore. And by default, Globe won at the same price that the pawn shop originally priced it. But the reason the pawn shop wasn't bidding was because they weren't actually sure if they were making money out of the rate at 42 pesos. Okay. And then the other aspect of my findings is the feasibility of using mobile money. So the projected cost of using Smart Money or GCash can be potentially lower, especially for smaller and more frequent cash transfers, which is actually what the government wants to do. And then Smart would be a more technically feasible alternative should direct transfers to cell phones are considered, largely because all, if not most of the beneficiaries are actually smart subscribers. And second, there are more smart money facilities and merchants in the places that we've surveyed. So thank you very much, and if you have any questions, I'd be happy to answer them later. Thank you.
I'll just stay down here. Our last will be from India, Deepti Casey and Mudita Tiwari.
Good afternoon, everybody. And good news is this is the last presentation before alcohol. So please bear us for another 15 minutes. My name is Deepti Casey, and this is my research partner, Mudita Tiwari. And our research focused on understanding the movement of cash of the privately led enterprises in one slum in India, and just to understand the scope of e-payment in that particular slum. We conducted this study in Dharavi, which is the largest slum in Asia. And Dharavi is located in the middle of the city called Mumbai. And if Mumbai is the commercial capital of India. And it is reported that in Dharavi, in this particular slum, there are more than 5,000 informal enterprises. And the goods produced from this particular slum every year is almost more than $650 million. So there are a lot of informal businesses in this particular slum. We focused only on 3 industries, and also I would like to mention that this was a very difficult location to conduct any kind of study, because there are a lot of not only informal business but also illegal activities going on. So what Mudita and I did is, like, for each industry type we spent like almost 10 to 12 days going back to the same entrepreneur, business owner again and again. And also we are asking them questions about cash, how much money, all these things. So this was a very ethnographic in nature study. Overall objective of the study, we want to understand the existing financial transaction for these 3 industry types, and also to determine the social, cultural, and business factors that influence the decision for using cash or e-payment system. And more important, to understand the scope of e-payment, because there are a lot of informal businesses and a lot of large volume of cash transactions going on. So we want to understand if there is any scope for e-transaction in this slum. Our first enterprise was leather business. It's a very largest and most lucrative enterprise in Dharavi. We spent time with 18 entrepreneurs from the industry, and the reported transaction for 1 month prior to our study is around $750, and we think it's an underreported number. It's much more than $750, but that is what was reported. And all of these business owners had mobile phones, they had bank accounts, and also state-issued ID. The second enterprise, we focused on small, kirana shops as well as medium-sized retailers. We interviewed around 52 business owners, and the transaction, the 1 month prior to our study, the reported transaction, the volume of transaction is around $1,000. Again, most of them had mobile phones, bank accounts, and state-issued ID. We also found, when we entered Dharavi, we found these women-led enterprises, whole industry run by women, and we really wanted to understand their business, and especially it was women were running this particular industry. And we interviewed 25 women, and the transaction was around $600 per month. Again, all of them had bank accounts, state issues ID, and also they had mobile phones. Despite having bank accounts and obviously $600, $1,000, that's a lot of money. And we asked them, like, what mode of transaction they use, and most of them, they said they use cash transaction, especially when they are dealing with customers. Sometimes with suppliers, they gave checks to their suppliers, but when it comes to taking payments from customers, most of them, they just wanted cash. And we wanted to understand, reasons for using cash. And we were doing this study, we were talking with them. There were a lot of stories that they shared, stories about getting fake notes. There was one business owner who shared a story that he had a bundle of notes, and the next morning, mouse totally destroyed, ate the notes. All these stories were there, and we thought like they would have a lot of stories to share. We thought they would say cash, dealing with cash is so difficult and all those things, but no, they were so sure that cash is convenient and safe. It's sort of deep-rooted belief that cash is safe, cash transaction is convenient, and it's because it's traditionally used. And also, again, we kept asking about, we really wanted some stories about, there's a lot of money, $1,000, all these things. So we really wanted to understand about if they are facing any difficulties, in dealing with cash. And again, it was like they had stories, all these mouse-eating notes and, getting fake notes and all those things, but again, they would say it's very safe, very convenient. And very few actually talked about difficulties in dealing with cash transaction. And most important thing was like they always carried cash for transaction. And when they didn't have to pay to suppliers or to customers, they deposited their money in the bank account, but when they have to pay, they generally go to the bank accounts and withdraw money and give it to their suppliers or take money from customers. So it was going on there. We also wanted to ask the same question to clients and suppliers because we wanted to get data from multiple sources. And it's the same thing, especially when suppliers, their volume of cash transaction was more than $2,000 per month, but still they were using cash because, again, they thought it was convenient and safe. So it is not that in Dharavi, access to finance is an issue. We heard some stories that commercial banks try to enter this market, but somehow I think it was not profitable and they just left. But there's one particular local bank branch that we found in Dharavi, and we did a detailed case study of this particular bank, like why this bank is so popular amongst the slum dwellers in Dharavi. And we found that this particular bank had this very client-centric approach. And when we say client-centric, they were open at midnights, open on Sundays also, so these business owners could go to the bank anytime. And more important, they were allowing large cash withdrawals every day. And also, obviously, State Bank of India it's a government bank, and it's a very well-reputed bank. And there was only 2 bank branches we saw in our study area. And also we found some banking agents, mostly they were targeting migrants, and their marketing strategy was mostly relying on the word of mouth things. So this is, I'll just hand over to Mudita.
Okay, so just recapping a few things that Deepti mentioned. Our findings indicate that cash was perceived not only as a convenient option, but also a safer option. And the reasons for that were plenty. The business owners had a strong preference for cash, and we feel that is because cash has been traditionally moving in Dharavi through the years. Not only that, we found that the business owners save on taxation through these undocumented transactions. They do not want their cash transactions to come in the purview of the formal institutions and the banks. So they just sort of stay away from the banks for their business transactions. The other thing we found is that there was a general mistrust of the banks, the agents, and even the e-payment systems, ATM cards, debit cards, credit cards, and so on. Despite these findings, one thing that we noticed, as Deepti was mentioning, is that a majority of our clients had bank accounts. A lot of young business owners were already using mobile banking services. So it's not like they didn't have an idea or they weren't using these services for their personal use. They just didn't want to use it for business. In addition, physical access to financial institutions didn't seem like a problem. There were ATMs, there were agents, there were also bank locations in the study area. So basically, we kept wondering, what is it that's an impediment to mobile banking services when, there seems to be an avenue here? A majority of our respondents indicated that lack of information, similar to, I guess, what you found in your study as well. Lack of information was constantly stated as an issue. Not only lack of information about banking services, but obviously the more, the newer technologies, mobile services, internet services, banking services, and so on. And the community also indicated a need for such information for their own well-being, financial well-being in future. So basically, we realized that not only is there scope for mobile services, there's also a need for it possibly in the community. And lack of information seemed like a significant impediment. So armed with this information, we went back to the drawing board and we decided that let's test out a pilot of a financial tool. And the idea behind this financial tool was to give basic information to our respondents. So as Deepti was mentioning, we kept going back several times. So we took this financial tool. It was developed on a tablet. We sort of did it together. It was very basic, and the idea was to talk about basic financial services and products that are available, savings accounts, mobile banking services, internet banking, and things like that. And we tested it, as you can see, with our clients. So the feedback that we got is that the content was well received, but the context was a bit lacking. Clients said that they needed stories that were more relatable, characters that they could relate to, context that was more specific to their situations, and local language. So again, we went back to the drawing board. This time we partnered with a local animation partner, Nartey Solutions. They're based out of Mumbai. And actually the guy leading that is an Ashoka fellow, a great person, in fact. So we're teaming with them at the moment, and we're developing an interactive comic book style, glossy pictures to engage the audience. And it's going to be similar stuff where we're talking about basic financial services, internet banking, mobile technology, and so on and so forth. And we're developing 6 such stories, going from simple to more difficult stories. And the idea is to test them out. And we're currently sort of in the process of developing them. Extensive piloting has already taken place. I want to share one such story with you, and we'll be very happy to receive feedback. This is the first of the 6. And we're introducing characters that are from Dharavi at the moment, and this story can be adapted to any context. The idea is that any NGO partner, any practitioner should be able to pick this up, just change the words or the verbiage can just sort of be translated to the local language context and applied there. And I wanted to add that some of the materials used in these stories is also influenced by our impact evaluation studies that we conducted in other parts of India earlier, in Uttar Pradesh and Bihar, with our partners ECHO and FINO. So we used all of this contextual knowledge to develop these stories. So here we introduce you to 2 characters, Ramu and Shamlal, who are working to what you saw was the leather factory. And they unfortunately succumbed to an accident. And both land up in the hospital. Now, we use this story because as I'm sure a lot of you know that health shock ends up being a significant financial shock for a lot of poor. And it is a common story that was shared by a majority of our respondents. So they quickly related to this story, and they both land up in the hospital. They cannot work for a month. One of the friends has been saving and the other one hasn't. And so, And so they discuss how is it that we're going to pay for our illness. And one of the friends goes on to tell, I have been cutting back on my non-essential expenses. I know a lot of public health people, and I happen to have a public health background, might probably take issue with this, but we weren't trying to preach public health behavior. We were trying to sort of engage the audience and talk to them about disciplined ways of saving little every day. Because I think that was the biggest issue that we noticed, that people just felt that just saving lots of money is just too big a thing. It's easier taking a loan. And so we wanted to show them simple behavioral ways to save little every day and hopefully build something for themselves for future. So here Ramu talks about how he's able to save little every day, and as a result doesn't have to take a loan. So each story ends with lessons learned, and a question-answer session, which essentially reiterates the findings of the story. And so we do this for 6 stories. We have some stories with us. We printed them out in case you would like to take a look. But that's sort of the idea. So the next steps is that, of course, we finish the 6 stories that we have, but we also want to develop these for context. We were just talking about how context is so important. When we take this story to women, somehow it doesn't sink in just as well as we would like it to, because they have their own sets of problems when they're trying to save money. So we're developing a separate set of stories for women. We also want to target the more financially advanced users, talking to them about complex products such as pensions, insurance, and things like that. In addition, we're trying to raise funds for a 3D app or a mobile app. And the reason for that is a majority of our clients use mobile phones. They're quite savvy. A lot of young business owners are already conducting mobile banking on phones. So we'd like to develop an app that can be easily downloaded on a mobile phone and can be watched by anybody and everybody. We understand that not all of our clients might be literate, so it makes sense to probably watch something. It just makes more sense because of the evolving technology. It again is going to be colorful graphics, easy to understand. It can be used by any of the local partners who are interested, NGOs, etc. And we also want to enlist students. There are schools in Dharavi, and the students have a significant impact on the behaviors of their parents. So we want to also enlist schools, distribute our comic books or the apps if they are developed in time. So we're looking forward to your feedback. In case you have any questions for us, please do let us know. And thank you so much.
Well, I can see already that there's one thing that business and academia have in common, and that's surprises. We heard from the team in India and in the Philippines about some surprises. Now, you're just beginning to look at your research, right, out of Ghana and Nigeria. Have any big surprises popped up for you in what you've seen so far?
Well, one of the initial surprise for us was, so coming to the question of adoption, the issue of information, it seems like the telcos have done a fabulous job with their marketing. The people know the stories, they know the jingles, they actually told me blow by blow what the little advert was. And then it's like, so do you use mobile money? No, it's not really for me. So it's where we've come from the lens where if you market it and you let people know, they automatically adopt it. But there's something missing in there that is preventing this adoption, which is something that the marketing group can't handle. So it comes back to the human factors you were talking about, and we need to explore that. That's one of our biggest. So
the surprise was that it wasn't a lack of knowledge.
It's a lack of something else.
Something else.
We're thinking
That's really
trust right now, but when we'll run the empirics, we'll let you know.
So I just have a few questions, and then I'll open it up for everybody else. But forgive my ignorance. I also wanted to ask your team, what is the Susu savings? I didn't know what that was.
Susu, It's essentially it's little contributions. So it's the market women. One market woman will be a susu person, and then she has a little book and goes around and gets
a savings
all the money.
club.
It's
kind
a
of.
savings
Okay.
club. But the thing too is that, so coming to the issue about the cash disappearing and it's still safe, they gave examples of one day the susu seller's gone. Nobody knows where the susu person's gone and all the money's gone with them. But is susu safe? Yes, susu's still safe. Will you still use susu? Well, I'll still use susu.
Yeah. Okay, great. Thank you. So in the Philippines, I thought it was just fascinating what you learned, and I did have a question about the economics. You showed the cost, and am I right? You're saying the government was paying those costs that you showed? And my question is, does the end user, did they have to pay anything?
Yeah, the cost is shouldered by government. The fee they pay Globe.
Mm-hmm.
The users only pay their transportation. So on average, I think in our survey, a third actually just walk to the centers, the exchange, and then on average, I think they spend around 30 pesos. I think the government wanted the threshold to be less than 100 because when they first implemented it, there were some complaints that the transportation cost was higher than what they were getting in the transfer. So that's why they wanted to bring the distribution of transfers as close to the people as possible.
So do you expect there's going to be sort of a remittance 2.0 approach to this, a different way of handling?
I think what I was surprised about was that they didn't even think about doing it that way. Because when I hear GCash, I'd expect it to go directly to the... What I can't imagine is why they haven't even piloted or tried or experimented on that. And part of the reason I'm hopeful is because when I was reading an article in Niger, of all places, they did an experiment on using it that way. So I'm hopeful if it's possible to at least do a pilot of that.
Seems like it would be a sensible approach, right? Okay, thanks. And in India, here's something I was surprised about in your presentation was that they all had bank accounts. And did you get a feeling, is that relatively recent? Is it part of the government's initiatives to try to expand bank accounts? Or what's up with that, as we say?
So with leather enterprise, I won't call them poor people, poor business micro entrepreneurs. They are quite, rich, probably richer than you and me, but just that they operate in slum, live in slum. That is something surprising for us also. So obviously, they are dealing with thousands of dollars. So for them to go and open a bank account is not a big deal. With women entrepreneurs, which was 100% of them, all of them had bank accounts. So for this particular entrepreneurs, what they were doing was like they were getting raw materials from one factory, it's a big papad industry. So they made sure that they open bank accounts. That's So what they had a scheme where they would deposit a 10% or some percentage of their salary to directly to the savings account and 90% cash.
Wow.
And we asked them like, why 90% cash? Why don't you ask your employer to directly transfer all your salary directly to bank? But still they were like, no, we want cash. That's something else. So with this particular woman, this was the employer who opened bank accounts for all these women.
So I guess my other question, the other thing that I thought of when you were talking about your entrepreneurs that you dealt with is one of the humbling lessons we're learning in the United States and other more developed countries with payments is that payments are often, they're sort of disappearing, we're saying, and that what's happening with mobile phones is all about commerce, and the payments are just in the background. Are any of these entrepreneurs starting to use their phones for ordering, other than by talking, ordering things from their suppliers? And do you think that might be a path to then also paying with their phone?
So what we did find is that checks were used commonly, and those were primarily in industries where they knew that the government might raid their enterprise for black money. So if they knew that the government would come after them, they would try and show at least portions of their transactions as white. But for most of the business dealings, they did have a strong preference for cash only. Mobile banking was used by business owners to transfer money to their employees in times of emergency, for example, or if there was a large amount of money that needed to be remitted or something like that. But primarily, they tried to stay away from business banking via mobile services. That's what we found. However, they did say that it is something convenient. That's something that they're looking forward to in future, especially paying out their employees via mobile.
One last question about those entrepreneurs. Were any of them using smartphones, or
oh, yes.
What percentage then? Or
so in the leather enterprise, I would have to say probably an overwhelming majority, just because these people were, and I think, when we say that the surprise was, I think, the shock of the century for us, because these guys were loaded. We just sort of asked them, because, we just hang around every single day. And so after a while, they just like, okay, these girls just sit here all day. And they asked us, they almost mocked us. They're like, how much money are you carrying? And I'm like, well, maybe 1,000 rupees, 2,000 rupees. And then, well, I'm carrying 2 lakh rupees, which is equivalent to what, like $4,000 in each pocket. Wow. And they would show, and that is a significant amount to carry even for like normal you and I. I mean, I am not sure we would feel safe carrying that. But it seems like there's a lot of transactions obviously that happen, and they need to present cash almost immediately. So they feel that comfort, and I guess it's just fun to walk around with that much money.
Great. Well, fascinating.
I would also like to add one story of finding. Like, they use mobile money, especially the entrepreneurs, especially while dealing with suppliers. As for example, for leather business, the raw material comes from somewhere else, and there's a huge competition going on there. So they have to, tell the supplier, we are going to give you so and so. There's a competition about how much money these business owners are giving, and everything happens through mobile phones.
But then they make the bids through.
Yeah, they make bids through.
So they
mobile
do.
phones.
That's very interesting.
That's
very interesting.
The bids are made through mobile phones, not the payments, but bids.
Very interesting. Okay. Well, let's open it up for questions from the audience.
Elizabeth from Mercy Corps. Erwin, question for you. As the people are standing in line for the CCTs, are they doing 100% cash out? And second question is, as these markets start to follow the cash distribution days, are you starting to see any of the merchants actually accepting Gcash, which is a way to get people out of the line and buying from them faster?
First of all, everything is cash. So before, the model was the merchant would still text Globe, the main office, just to validate the beneficiary. But the beneficiary is actually pre-validated by a social worker. So actually that validation between the merchant and Globe, to my mind, is actually unnecessary. But I think that's just for records keeping between the merchant and Globe. So everybody gets cash. So people don't transact, when the market follows them, they also transact in cash. Okay? And then if the merchant then goes to the next city or the next town to distribute the transfers, the market also follows them where they are. So I thought my interest there is also to see whether people end up buying unnecessary things because, of course, the market is following the cash versus if it's mobile money, the market won't even know that they have money.
Okay, thanks.
Hi, Vivian Jokuto, Virginia Commonwealth University. My question is for Lite and Yinka. My question is about what you said about the trust thing, or why the uptake is low, and maybe it's trust. So what are your thoughts about why that might be? What do you think is driving the lack of trust? And then the second issue is, do you think that it really is trust that is driving it, or more of a lack of everyday uses of mobile money? So, like what you said of people can't use it to pay for rides and in the market. So if those infrastructures were in place, would people then use it? So kind of, if you build it, they will come from the perspective of, if you convince the business people to use it, then the consumers will actually use it.
I think they're sort of related. The trust issue is there because there's the fear of the unknown. And especially when it relates to financial transactions, people have confidence in cash because they can feel it, they can touch it, it's a material being that they see. So you realize that in the context of, especially the poor people, loss of money is a very big deal to the poor. You go to an ATM, you want to withdraw money, and the ATM has a no dispense. That might be the person's last money, and then he doesn't have access to it. So it's very difficult to build that trust, especially where systems and infrastructures don't quite work properly. So then the issue of everyday use. If everyday use is available and it works reliably, I think it would make an impact on the trust issue. But the fact is that it's not there. We have very few merchants, very few agents. So you realize that it's a real chicken and egg. So it's one of those things that we want trust, but we also want the service, and we want the products, and we want the utility and acceptance. So we just need to be building all, and everything sort of works towards the same goal.
Relatedly, I also, so for example, one of the market women that we spoke with, who happened to have, she does Facebook and stuff on her phone, which was a surprise. But anyway, so coming to this lack of everyday use, so she seems to be very, very savvy. And one of the things where even if we don't have a lot of the infrastructure, even if just more of them used it, then there could be that greater adoption, which comes to the reduction of the risk. The people, you can send it to your suppliers. And she was saying something like she would love to be able to buy tomatoes and send the money, but the person on the other side doesn't use it for whatever reasons. They don't use it, and so she's limited in that way. So,
okay, great.
I have a couple questions for Deepti and Mudita. First, the comic book is fascinating. I know this fellow who works in an NGO in Delhi who does development all through comics, and a way to get especially children in the Northeast where I work to have a critical voice against political corruption and what they see as problems. So I want to share that with you later because it's a fascinating medium for these things. But here are my two questions. The first one is more general. The first one's a more difficult question for me to ask because it involves an illegal premise. And that's, why aren't people considering developing something like black mobile money? I mean, forgive my naivety, but if major corporations around the world can get away with hiding, their money in various offshore sources, and the poor are interested in cash is king because it's easily, a way to hide and to, decrease a paper trail, then wouldn't this be something that's possible to develop? Maybe not on the premise of illegality, but at least the possibility of doing something like that. I mean, it would seem reasonable to me, especially in the context where I work.
Did I hear somebody say Bitcoin? No.
You go.
I couldn't resist it, sorry.
The other question is more an ethnographic one, which is regarding the comic book design itself. I was fascinated by the fact that the two things, of course, that the leather workers are sacrificing are bidis and booze. And you made the point about, you're not talking about public health, this wasn't done in a public health thing, but I was just thinking, one of the things my friends where I work say is a day without alcohol is a day not worth living. and no, this is very true, not just for celebration, but for ritual purposes and things like that. I mean, I'm Irish, I believe that too. I have a very strong association with alcohol. And I just wonder, could that, the question, it's a broader ethnographic question, which is what could be sacrificed in terms of savings? How would you be able to locate what in a certain context is sacrifice, what is capable of being sacrificed and what isn't in order to promote savings?
Yeah, hi. I just wanted to add to what you just mentioned, is how do you take care of whether the language, the context in a comic communication is discriminatory or is fairly democratized? Is that a consideration, and how do you kind of take care of it?
Sure, so I'll answer and then... So the first question was, why aren't there apps or technologies that are catered towards quote-unquote black money being developed? Now, I'm not entirely sure. I'm sure there's ways to get around that. I'm sure something is happening. For example, the cooperative bank that we just showed briefly. An overwhelming majority of the business owners go to that bank, and that is one of the most thriving banks over there. And I know that they have ways to sort of appease the clients. So, for example, the check limit is probably 50,000 rupees a day, which is $1,000 a day or some US dollars a day. I think they have raised that or managed to raise that through some loopholes. So there's ways to, I guess, accommodate the needs of the business owners. But as far as specific products for black money or to accommodate that are concerned, and I think I would invite Abhishek to talk about that. You probably deal with a lot of these sort of questions and issues. But what we've noticed, at least in Dharavi, what we heard from people is that people just store wads of cash at home, or they end up investing in property or something like that as soon as they get a vast amount of cash. So I don't have a perfect answer to the first question. The second one, I think, is a very difficult one. How do you decide what is it that needs to be sacrificed and what is a non-essential expense? Non-essential expense is very different for each person. And the reason why we say that is we did, so much work in Uttar Pradesh and Bihar where we struggle with the same issue. We are going to people who are barely, surviving, and we tell them that, that one cigarette that you're having in a day, please cut it out. That's not. But that might be the only last source of entertainment that probably exists. When we ask people, what is it that you think is non-essential? So we tried it both ways. We tried advocating, and then we obviously tried very hard listening to them. One of the things that people said is that I'll just cut back on food. I'll just cut back on medicines. And those are the things that are absolutely essential. We never want to advocate things like that. So if we had the time and the resources, we typically, the way we address this issue is that we list out all the various categories of expenses that people have, and then we ask them to choose. What is it that you think is going to be places where you can cut back? And inevitably, most people state that it is probably alcohol, it's probably cigarettes, it's probably mobile, songs that are downloaded on mobile phones, it's videos and things like that on mobile phones. So I think over a period of time, we've realized that those are the categories that tend to be non-essential. So we've taken the liberty to advocate that for this time around. When we worked in Dharavi, that was an overwhelming response that we got from people as well, that they could potentially cut back in these areas. And then lastly, the use of language. I think that's a very sensitive that's a very sensitive issue. I think you need to be very respectful of the issues that people face. And the one way we do it is, again, establishing that connection with our respondents. So we have to spend the time, sit with them, understand the local language, understand the local terms and terminology, and those are the ones that we try and use in our comic books. So, for example, the comic books that we have are going to be translated into Hindi and Marathi at the moment, and then we work a lot with sort of language experts, basically, given our limited resources, the language experts that we can sort of work with, I would say, to ensure that we are sensitive, and sort of that's the best that we can do.
Okay. Thank you.
And also, just to add a couple of points, again, our comic book, our idea is not to tell them what is right and what is wrong. We are just showing them the situation, and this is the situation, and these are the stories that we collected from respondents. Even last year, we conducted a study with rickshaw pullers, and one problem that I don't know if it's a problem or whatever you call it, gambling is a big issue, when it comes to saving money. They're spending a lot of money on gambling and other stuff. So we are just showing them the situation, like, when you gamble, you lose money, so at the end of the day, you don't have money. So we are not going there and telling them don't gamble. So after every story, we have a question-answer session where we are asking them question like, as for example, Ramu, one character is doing everything right, according to us, and the other character is doing everything wrong, not saving or whatever. So we are asking them you can relate to Ramu or Shamu. What's your life? Ram's life, the guys, right guys, or the other guys? We are not telling what is right, what is wrong. We are just asking them, whom you can relate to. So it's a very participatory approach. And when they say like our life is very similar to Shamu's, then we are telling them, so did you face this situation? And they were like very open, And one reason why we developed this comic book, when we first entered Dharavi and when we start, with we are regular researchers with regular questionnaire, and we thought like we'll ask question and they will answer. We were really disappointed. Nobody was willing to share anything. Everybody was said everything is fine, life is perfect, everything is fine. When we started showing these comic books, they started telling their stories, they started telling their problems. So somehow, the comic book helped them analyze their own lifestyle. So without telling what is right, what is wrong, we are just showing some examples from their life, so they understand, the importance of savings.
I think we have time for a couple more questions.
One quick comment about the comic books. A colleague, Jonathan Boucher, developed comic books for life insurance in Mexico. You can look it up through the Milk Project, and was very successful in marketing life insurance. And it's a story of women. It's specifically directed at women micro-entrepreneurs and understanding what life insurance does. Bauchet, Boucher. But Jen, just a comment for everybody, having a conversation earlier about how M-Pesa is perceived as the product of the common man in Kenya, and as you rise in the middle classes, you shun it because it's the poor people's thing, and in Ghana and Nigeria, well, no, it's the product for the rich. And that is actually probably the normative situation globally, right? Holding cash is a problem for people who have a lot of it. It's not particularly problematic for people who don't have very much of it. It's just not that hard of a problem. And even in these Dharavi businesses, thinking of them as poor owners, that seems like a lot of cash, but it's actually not that much cash overall. So any thoughts as to why we are conceiving of these products for poor people in general instead of products for the middle class, and developing mobile money through the channels like they do in developed countries? Credit and mobile money was a product for the rich, and then it became an aspirational product for the poor, not a product for the poor that the rich would shun.
In the Philippines, actually, there's a segmentation in terms of the mobile market, and I think there's also a segmentation in terms of the mobile money. So I had a study a few years back on the use of GCash in e-commerce, because even though you say there are rich people and there are middle class, a large part of the middle class, at least in the Philippines, don't have access to credit cards. So one thing that they did was they used Gcash as a platform for making online transactions. It was quite interesting in the sense that you'll see something on the internet, and then they'll give you the phone number, and you could send the Gcash. And this is where the trust component comes in. You start sending your money, and then you have no control, and you just have to wait for that good to come. And then online, what they do is they have an online platform to say who's trustworthy and who's not. Okay, and then to build that trust, you start off with small transactions. So the technology was there. How it was applied, I think, was an evolution, and it was something that, for me, was the middle class that did it. And in terms of networks, I thought it was a good confluence of this is a network. This mobile phone is a network of the middle class. Gcash is the application is something very middle class. Whereas conditional cash transfers are geared towards the poor, then you think of the network of the other mobile company, which tends to have a lower ARPU and lower segmentation. And I think it's a combination of that.
We have time for, go ahead, I'm sorry.
Well, I think in that question, why not develop it just for the rich? It's one of those things where the rich don't have the problem in terms of formal banking methods. The people we don't know what happens with are the people who are not banked or the informal methods of financial transactions. So you find that that's still a big problem people are trying to solve. In other words, you'd read all the World Bank reports about $2 a day, et cetera, and the level of poverty, but are those figures really accurate if you really don't know what really goes on in the cash-based economies and things like that? So people are trying to sort of say, how can we convert a lot of these unbanked users into the into some form of formal sector, so there can be the recording of financial transactions. And that's really the motivation for mobile money. It's the same thing that happened with microfinance banking as well. And that's really what people are trying to do. But it doesn't seem to be working because people love their cash and trust their cash. And then again, it goes back to the utility function. I still can't use these products for my everyday goods and services. So the issue of economies of scale, the issues, the social and cultural issues, but all these things need to be sort of worked on a neck and neck. Otherwise, we're still going to continue talking about the same things over and over again.
I actually think that's a really great summary of what we've said on the panel. I'm going to rashly commit my panel to being available during the cocktail hour to answer the questions, because I know there were a lot of hands that were raised earlier. But thank you all for your talks. Thank you.
Thank you, Carol. And thank you, panel. And I know there's going to be a lot of discussion at dinner and at our reception. It's really been a fantastic day. I just want to add one little tiny substantive thing, okay? That when we talk about sort of is mobile money something for people who are poor or rich or middle class, I think in some of the stuff that we've done over the past couple of years, we've sometimes found that when people say it's not for me, it's for richer people, they sometimes mean different things. And sometimes they might mean, when they say rich, they mean somebody of higher rank who may not actually be richer than them, but outranks them in a system of social statuses. Or another context, when they say rich, what they're really saying is old. I don't, sort of an elder or someone who is of a sort of more senior status, maybe not a rank status, but one just based on age. And it's been interesting to see that play out in different parts of the world differently. So that was my little Bill's anthro moment. And with that, let me thank all of our discussants and our panelists for the day.